Nearly 1 in 3 Australian mortgage holders are now in risk of mortgage stress. The average new owner-occupied loan has jumped to $736,000. That's 10% more in a single year than last. And refinance applications are surging. If your repayments feel tighter than you did 6 months ago, you're not alone. Real things that you can do about it. Stick with me in this video. The headline figure from Roy Morgan, 30.3% are at risk. That sounds crazy, but at risk doesn't mean defaulting. It means your repayments are above a certain share of the household income. It's a warning light. Don't get me wrong, it's not an emergency. The danger zone is when everything else goes wrong on top. A job loss, a major repair. For context, the all-time peak was 35.6% during the GFC. We're not there, but we are close than we have been in 18 years. So why is this happening? A quick refresher. The Middle East conflict pushed energy prices up, and the Reserve Bank has hiked it 3 times in 2026 alone, bringing the current cash rate at 4.35%. Now, here's the part that should give you some hope. The gap between what existing customers are paying and what new customers are getting offered. It's called loyalty tax, and the gap has widened again. Banks compete hard for new business and quietly leave existing customers on higher rates. Borrowers refinancing now are saving anywhere between 0.3 to 0.7% off their current rate just by switching lenders. On a $736,000 loan on 0.5% off your rate, that's roughly $300 a month back in your pocket. That's not chump change. That's just grocery bills. 3 quick checks before you act. 1. When was the last time you checked your rate review? Has it been over 18 months? Ask that question to yourself, because if it is, you could be paying way too much. Just call and ask the question. Ask for the retention team for a rate review. 2. What is your LVR? If you're below 80%, then that can open sharper deals. 3. Talk to a broker before applying. They are free for you. They get paid by the lender, and a rejected application can hit your credit file. Now, if you're already under pressure, the worst thing you can do is silence. Call your lender before you miss a payment. Every major bank has a hardship team, not collections. Their actual job is to keep you in your home. They may be able to pause payments, switch you to interest only, or extend your loan term if the arrangement is in advance. And it doesn't hit your credit file if it's done the right way. And you can find more information by calling the National Debt Hotline at 1-800-007-007. It's also free, independent, and confidential. They don't sell you anything, they just help, because clarity is key. Having a conversation with someone outside of your family or friends might be the thing that is going to help you. Now, here's a thing about nobody talks about. Roy Morgan's own analysis says the biggest factor of mortgage stress is not just the cash rate. It's whether you still have a job right now. Over 1 in 5 Australian workers are currently unemployed. You heard that, unemployed. So if your job feels secure and you're not resilient, then the headline suggests your job feels shaky. Your priority is not refinancing. It is building a cash buffer inside your offset account before anything else. So here's a short version of mortgage stress. It's not 2008. The loyalty tax is real, and switching can save you hundreds of a month. But if things are tight, your lender and the National Debt Helpline are both on your side. 2 phone calls worth making this month, and your mortgage broker might be another. So if you're struggling, 1-800-007-007 is if it helped. And if this helped, hit subscribe, and I'll see you next week.